So what should we start with? The big picture, JLR margins, or the thought behind going ahead with delisting of Tata Motor DVR?
Your call, Nicholas. Fine with whichever you prefer, we'll go with. But thanks for having me on the show.
So let's start with the big picture. If I look at the management commentary, you're sounding bullish. You're confident of demand and you're confident of margin expansion. What is fueling this optimism? Is it demand or normalization of supply chain?
I think there are a few moving parts here, Nicholas. I think number one, let's take JLR. I think in JLR, the order book of 185,000, the kind of preference we are getting for the new launches of Range Rover, Range Rover Sport and Defender, which is forming almost 76% of this order book. I think the work that we have done over the last many years in keeping running a tight ship and reducing the break evens to 300,000 means that this business is actually having a strong top line and is able to manage the cost structures very tightly, which means you should be able to see the performance lift because of that. And I think the journey going forward towards premium luxury is another important aspect of this game, because the brands are very well positioned to get into the world of premium luxury, where demand resilience to movements in the economic factors are lesser, and therefore the demand is more resilient. That is going to help us in terms of growth going forward. And the plans on electrification also means that we are securing our future in this turbulent period. Domestically speaking, I think the demand environment on CV has had a very, very poor last 4-5 years due to multiple factors ever since the financial challenges out of the IMF crisis started. Then we had a BS6 migration, then we had COVID, then we had just runaway steel prices. And therefore, all this is now behind us. And the investments that the government is doing on infrastructure is also going to help from a demand perspective. And in the meanwhile, we have also changed our strategy to start focusing squarely on profitable growth rather than just market share. And that is giving us more degrees of freedom to play in terms of better branding, better innovation, better product offerings, better service. And this combination of a good demand scenario and focus on profitability should augur well as far as the CV business is concerned. On the PV side, I think it's been a extremely satisfying and remarkable turnaround amidst all odds, and therefore quite confident of 100,000 sale this year, with the launches also coming in. So there in EVs, the product offensive is priority one, and stepping up profitability in second half of the year is priority two.
So Balaji, when you talk about the JLR engine firing full cylinders, the capacity expansion number and the sales numbers, something which you've shared with us, have you ensured the supply chain and the semiconductor supply is also something which you've managed to capture, and you've got promises which in a sense will not interfere with your launches, or that is still something which is conjecture?
I think it's significantly improved. I will not say we are out of the woods. Having said that, we are significantly better than where we were before. We are getting much more visibility into, we're not talking in terms of visibility into end of Q2 and beyond, compared to earlier it is just a week or two. So things have improved substantially, but it's fair to say not every issue has been nailed down. There is still a lot of last minute firefighting that does happen to ensure supplies of September are secured right away. So the situation is better, but not fully out of the woods.